got Emma Stevens with me from Emma Stevens Accountancy, and we're going to be talking about some of the new changes that are happening with the budget announcement that just come out. Obviously, it's all very fresh, so some of it's a bit new to all of us, but I'm going to be asking Emma some questions. We're going to have a little look at a few different things. We're going to kind of look at the some limited company stuff. We're going to look at some small business stuff. And just basically chat through some of the main things that are going to affect us, especially our small business owners. So, welcome, Emma. Thank you for joining me.
Thank you.
We're going to be covering things, aren't we, like tax rates and relief, savings, business rates, and a few childcare changes and stuff like that. So, we get started. So we've been chatting, Emma and I have just been chatting through various things just in the run up to this, just to see what we're going to cover when and things. So I thought I'd go straight in there with corporation tax. Now, some of the people that are listening are going to be startups or small businesses. They're not necessarily going to know the difference between corporation tax and personal allowance. So do you want to start with giving us a little bit of a rundown of that first, and then we'll go into what the changes mean?
Okay, so corporation tax is the tax that is charged on limited companies, PLCs, incorporated businesses. So at present, the companies pay 20% tax on all their business profits.
And so what will so that's obviously the corporation tax, and then we've got personal allowance, obviously, for sole traders.
So yeah, your sole trader, if you're an unincorporated business, you just pay personal tax, and you do that on your personal tax return, and pay that in the January the following year.
So what are the changes that are going to be relevant to us? What have we got coming in?
Okay, so coming in with corporation tax, in the summer budget in 2015, they announced that that would be reduced to 19% from 2017, and they announced last summer that it would go to 18% in 2020. In the budget this week, they announced that actually that will go to 17% in 2020. Currently we're already at 20%. We're already the lowest of the big countries. That's now showing us as an even lower percentage, and will make the UK an attractive place to do business.
Oh, okay. Yeah, I hadn't really thought of it from that. So yeah, so if you're a limited company, obviously you're going to be paying 17% tax by 2020. So that's kind of the main one on that one. So then that leads then into personal allowance. What sort of things are we looking at as a sole trader that's going to be different for us in terms of how much tax we're going to have to pay?
Okay, as a sole trader, you'll see an increase in your personal allowance from this April to 11,000 from the current 10,600. That was announced in summer 2015. Announced on Wednesday is that the personal allowance will become 11,500 from April 2017. So yeah. Although the rates at which the personal allowance is increasing has slowed from previous years, we're still seeing £500 increase, which is good. Yeah.
So it's obviously that much, so we can earn 11,500 before there's any tax to be paid.
That's right.
Now, from that, obviously, we can look briefly at the higher rate threshold, because that's also changing as well, isn't it? That's going up. No massive leaps and bounds, but it has gone up a little bit.
It is. So currently, if you earn 42,385 or more, you go into the 40% tax band. From April this year, it will be 43,000 that you earn before you go into that band, and then from April 2017, that's 45,000. So it's given a bit more relief to those on middle income bands.
Brilliant. So up to obviously 11,500 we pay no tax, and then between that and the 42,000, what is the your general basic tax rate?
So your basic tax rate is 20%.
Yeah.
So you pay 20% at the moment.
And then once we hit 2017-18, we're looking at once we get 45,000. So we'll pay 20% up to that, and then obviously 40% after that.
Yes, that's right.
Bit of a dent in the old wallet. Now, there are obviously going to be a few people watching this who are just starting up, thinking of starting up, or in fact running a business alongside a job. With this kind of in the small business, micro business sector, if you will. Now, there's a new allowance that's come in, which is the 1,000 allowance. Do you want to tell me a little bit more about that?
Yeah, this is great news for people starting a new business, especially where which is quite common that this business starts alongside their full-time job. And what's happened is they've announced a new £1,000 tax-free allowance for this purpose. So if you have a full-time job, say you're working with Tesco's earning £12,000, and you start making hairbands at home and selling those to shops or selling those to friends. At the moment, the way the tax system is set up is you would pay your tax on, you get your personal allowance and pay tax on your Tesco's wages, and then you would pay 20% tax on everything you make from your hairband business. This new £1,000 allowance means that although you're paying tax on your Tesco's wages, and you still will, until you earn over £1,000 on your hairband business, you won't pay any tax, which is great news, because it gives you the chance to build that business and get started, because those first few years in a new business it's hard. So it's good. It's a positive move, definitely.
It's a nice link there with Tesco's, and every little helps,
Exactly.
isn't it? And it's worth mentioning that £1,000 free, tax-free, is £1,000 profit, not
Exactly.
£1,000 turnover. And at that point, actually, do you want to just briefly mention the difference between profit and turnover? Now, some people who are obviously listening to that are going to roll their eyes and go, that's a real no-brainer. But there are plenty of people actually that I've spoken to who are just starting a business. They don't really get the difference between turnover and profit yet.
So your turnover are your sales. So any money you have coming in from selling your products or selling your services, that's your turnover. So it's the amount of money you have that comes in. Your profit is after you take into account your expenses. So if again, my hairband business, if I obviously would have to buy materials for that, and therefore I would have those expenses. So you deduct those off your turnover, and that gives you your profit. And your profit is what you pay the tax on, not your turnover.
Yeah, just in case people are panicking that they're going to pay lots and lots of tax on things that they don't have to. Just thought I'd mention that one, because I actually was asked it. I've been asked it a few times. And I guess like you forget, it's that curse of knowledge, isn't it? When you're a few years down the road and you forget what you didn't know when you first started out. So from there, let's go on to Class 2 National Insurance.
Right.
What has been happening with
it
that?
was announced in the budget this week that Class 2 National Insurance has now been abolished. And there was a lot of changes with it over the last couple of years, where they said that they weren't going to collect it anymore by direct debit, that it was going to be paid on your tax return. And now they have abolished it completely. It means a saving of £145 a year. So not a lot of money, but enough that, you know, who doesn't want £145? So yeah.
What's your insurance, doesn't it? The other thing you've got to pay for.
People that earn between 5,965 and 8,060 will no longer pay any national insurance at all. Anyone that owns over 8,060 will pay Class 4 national insurance when they do their tax return, which is charged at 9% of your profit.
Yeah, and that comes out in your normal tax bill, doesn't it? So when you get your tax bill at the end of the year, that National 4 insurance is all included. So there's no separate payments, because certainly I know I've been paying in the past separate payments towards national insurance, and then obviously you've got your tax bill as well. So this just means it's all in one lump.
Right. So now it will go in one lump when you do your tax return, rather than paying a little bit here and there.
Marvellous. And obviously national insurance applies also to employers, and there has been a change as well for the employer's allowance for national insurance as well, hasn't there?
So it was introduced a few years ago, an employer's allowance towards employers' national insurance, which allowed employers to claim £2,000 towards their national insurance bill each year, and that this year has risen to £3,000, which again, because there was some talk within the industry that it may be abolished completely. So the rise, that's a very good thing, especially given the rise in the minimum wage. That's definitely a positive thing for businesses.
Yes, of course. So that's presumably £3,000 per person per year.
Business per year.
Oh, per business per year.
All registered businesses registered for PAYE who have employees, they get that through their PAYE.
Is that irrelevant of number of employees? Because obviously that works out really well if you've got one employee, but not so well if you've got 100 employees.
It is it's better if you have one employee. But then you would assume that's a smaller business. If they've only got one employee, then they're going to be smaller, so they're going to benefit more from it.
So how does that get paid, that national insurance, that relief? So is that something that you just get, it just comes off your bill and then you just pay your bill as normally, or is that something that comes back at the end of the year? But
it's deducted from your PAYE bill, normally in the early months of the tax year. So your wages bill will be slightly lower at the beginning of the year.
Yeah, and obviously the minimum wage has obviously just gone up. And it's going up again as of 1st of April, presumably this year as well, isn't it?
In April. I think it's £7.20. £7.
Something like that, isn't it? Yeah.
But I'm sure it's 20.
That's not doing our homework in time for that one.
With intention of it going up eventually to £9 an hour, which that will be hard, but it's showing.
Yeah, it's going to be one of those. It's great because everybody should be earning a good wage, but it's tough for for small businesses, isn't it? But at least they've got a little bit of extra there. So
extra £1,000, that definitely is good.
Yeah. That kind of helps towards that balance across that, doesn't it? Okay, so what else have we got here? Let's have a look at ISAs while we're on this one. So obviously we have had ISAs for quite a while in terms of saving for whatever, tax-free, but we've got now quite a new, which I think is a really good thing, is the new lifetime ISA that's just started. Give me a little bit more information about what that is and what that means for us.
So yes, we've had ISAs for quite some time now, which allows you to save tax-free, and that band is going to go up from 15,000 to 20,000 in 2017. In addition, announced on Wednesday was a lifetime ISA, which is a new product that we hadn't heard about before, and this is aimed at people between 18 and 40 to try and encourage them to save for their retirement. It will be available from April 2017, and the account can be opened anytime before your 40th birthday. You then have between the date you open the account until you turn 50 to make deposits into that account. Now, the government has said if you deposit when you make a deposit between £0 and £4,000 a year, they will match it. Well, they will add 25%. So if you save £4,000 in 1 year, the government will add £1,000 to your account, which is great because who doesn't want free money? That money will then have to stay in the account until after your 60th birthday. So it's only available once you turn 60, and then it can be withdrawn tax-free.
Marvellous. Presumably, is there any interest in that account, or is the interest your government matched fund, which is the 25%?
You also get interest on the account. It's obviously very new. It's only 3 days old, so don't know the ins and outs yet. But yes, it would be interest as well as the £1,000 from the government. So yeah, it's great.
that's kind of a bit of a leap from every other kind of investment that there is around at the moment.
Yeah,
isn't it?
definitely. And it's a more sort of flexible way of saving for your retirement. So yeah, I think it's a very positive move. Definitely encourage anyone within that age band to open one of these accounts.
Yeah. So I just thought, actually, throwing it at you, that it might be worth at this point having a very, very brief mention of the whole auto enrolment thing, because that kind of cut the lifetime ISA. Obviously, the government are wanting us to save money for our pensions, because there's lots of people who aren't doing anything, and then they're hitting 60 and thinking, oh my goodness, I'm never ever going to be able to stop working because I haven't got any money. So obviously the government are doing lots of things, that lifetime ISA being one of them, to try and get us to have money when we retire, because obviously there's not enough going into the pot and there's too many people. So the auto enrolment, when does that come in? And who is it relevant for? How many people? Businesses, small business, like what size business, how much turnover, is there any relevance, how many members of staff, etc. Do you need to have for that to be relevant? Is it everybody? And also, when do you have to have it organised by?
So auto enrolment is any business registered for PAYE, regardless of whether they've got one employee or more. Your employees have to be auto enrolled, have to earn over £10,000 a year. The actual staging date will be dependent on individual circumstances. So I would encourage you, if you are registered for PAYE, to go onto the pension regulator website, put in your PAYE reference, and have a look and see what date you've got for auto enrolment. It's recommended that you start thinking about putting provisions in place at least 6 months before, ideally 12 months before your auto enrolment date. So yeah, that sort of covers the basics on that.
So as a limited company, if you're running a limited company and you're a one-man band doing a limited company, you are obviously an employee. You still have to do that. And is it right that as an employer, you have to set it up and then offer them it, and then they can decline it, or how does that work in terms of,
you set it up and you enroll them? If they qualify, you enroll them without, you give them, they have the option to opt out of being enrolled, but if nothing is communicated, then you enroll them.
So you don't have to enroll them unless they opt in, or is it that you have to enroll them anyway and then they can opt out of it if they choose to?
You have to enroll them anyway and they can opt out if they choose.
So anybody who's sitting there as a limited company with just themselves employed, or if they've got any staff earning 10k or more, and they're thinking that they don't have to do anything because they're not bothered about doing it themselves, or their member of staff is not bothered, you actually have to.
Need to
they opt out. Yeah. So they need to be getting on with it now, don't they? I know quite a few companies that have sorted it all out, and that was done months ago.
Even if it's just a case of taking advice, the advice is out there. But yeah, if you're registered for PAYE, you need to go and get some advice about the pension and auto enrolment.
Cool. So that's the lifetime ISA we've covered. We've covered the national insurance, tax-free doobie-doo. So let's have a look at annual investment allowance for investment capital items.
Right. So again, another positive move for small businesses. There's been an increase in the annual investment allowance to £2,000, which actually started in January. So this is available for both unincorporated businesses and incorporated. Incorporated businesses will claim it on their corporation tax return, but unincorporated businesses will claim that on their personal tax return. So that basically means if you make any investment into plant machinery, computer equipment, any of those capital assets, the year that you make that investment in it, you get 100% relief against your tax.
Oh, it's 100%. So what about depreciation?
So depreciation is an accounting calculation. So you don't include depreciation when you do a tax return. That's always added back when you calculate the tax. And in the past, you then claimed capital allowances, which used to be a percentage, but now as long as you're not investing more than £2,000 a year or other certain assets, then you get 100% relief, regardless of the depreciation that you've included in the accounts.
And how much was the amount that you can spend on these things?
So it's 200,000 up to 200,000.
Marvellous. So basically, if you've got a big tax bill and you want to pay something, and you've got in there early, you know what it's going to be. You're going to want to be buying lots of nice things.
Especially if you know you need to make that investment. Make that investment before the end of your tax year, definitely.
Yeah. Which some people miss.
They
don't
do,
they?
yeah.
Maybe.
And they have to wait another 12 months for that relief. So.
And that applies whether you're a sole trader or limited company.
That's correct. Yes, it does.
Marvellous. So VAT threshold. We haven't discussed this, so I'm throwing.
You are throwing it at me.
At you, but I'm going to give you some information as well. But essentially, the VAT threshold is still 83,000, isn't it, to be VAT registered?
Yes.
And what I'm looking at is that you need to register for VAT when your expected turnover is in the next 30 days going to hit 83,000. Right.
So you should always have an idea of your turnover at any point. You know, and you should have a cumulative turnover for the last 12 months so that you know when you are getting close to that 83,000, because I've had people before who have not realised they've gone over, and so they haven't charged VAT. They're still liable to pay the VAT, and it can get very messy. So yeah, always, if you're getting close to 80,000, always keep a record, definitely.
Yeah, and that's a 12-month period as well, isn't it? It's not your year turnover.
No, it's not your year turnover. It's 12 months on a rolling basis. So yeah, you need to keep track of the last 12 months.
12 months. So let's have a look here at business rates. This is quite a biggie.
Business rates is, and it was a very positive announcement in the budget that the business rates, the small business relief has doubled from 6,000 to 12,000. So business rates are the business equivalent to council tax. And it's charged in addition to rent if you rent a premises for your business. The open market rental value that is calculated on, which is where this 12,000 would come into effect, is calculated at the 1st of April 2008. So even if you are paying more than £12,000 in rent currently, you may still qualify for this small business relief. So there'll be about approximately 600,000 small businesses that will benefit, which is great.
Yeah, which is a lot, because rates are, on the high street, we need as much help as we can,
Definitely.
Don't we, to be able to get going. We all want to see interesting, unique, small businesses, but when you get the rates and the rent and all the other bits and pieces, it becomes very difficult to get going,
Definitely,
doesn't it?
Yeah, it can be quite a pressure on small businesses, and rates can be almost a third of what you're paying in rent or more. So to be able to get that relief, hopefully will give the high street a bit of a boost.
Yeah, get some more people coming on there, or at least keep them there long enough to become established, and then obviously
definitely
be there long term. Your little birdie's getting very vocal. Joining in the conversation. Obviously got a lot to say about business rates. So on that base, on the business rates thing, how would someone go about finding out? I guess it just comes in when they're investigating properties. I guess the thing to do is to have a look at what the rates would be and try and find one that fits within this threshold.
Yes, definitely.
Rather than leaving in with the one to try and find that, so they get that extra relief.
because the rateable value will vary from property to property. So I couldn't say, oh, this whole set will be exempt from business rates. It will vary depending on what property you're considering. So yeah, definitely need to research what the rateable value is and ask for that sort of information, which it should be available from past rate reviews and things. So
yeah, of course, yeah, because you've got to look back in time,
yes.
haven't you? Rather than what Okay, cool. So that's kind of that one. And then we've got a couple of questions which I'm going to ask once we've gone through these bits. So we also were talking earlier about tax relief on mortgage interest for rental properties.
That's right.
Because this is actually quite a change. It's going to have an impact on quite a few people who obviously have been talking about, there's been a lot of talk about how to raise your income and retire safely because you've got your rental property boom and all of this sort of stuff. And then suddenly, you know, they're kind of hitting the landlords quite hard with this new tax change.
Right. So in the past, tax relief on mortgage interest has been 100% of the interest could be deducted against profit. This has meant that a higher rate taxpayer who's in the 40% band would get 40% tax relief on that interest. This was announced last summer that this was changing, and that the only 20% tax tax relief could be claimed on mortgage interest from this April. So it will mean that there'll be some need for adjustment when you do your tax return on mortgage interest.
Is there a way that you can do that? Give me an example of that in real.
Okay. So you've got say Mr. Bloggs. He is a higher rate taxpayer. He pays 40% on his salary from Currys. Let's do Currys this time. Because he earns £80,000 a year. He also bought an investment property. He bought a flat for 140,000, and he mortgaged it for 40,000, and he had 100 grand in the bank to pay for it. So at the moment, when he does his tax return, he claims the interest on his £50,000 mortgage. And so he pays tax on, say his rent is £12,000 and he claims £6,000 of interest. So he pays tax on £6,000 at 40%, but he obviously gets the £6,000 interest gets tax relief. So going forward now, he will no longer be able to get tax relief on that full £6,000 because he will only be able to get 20% tax relief. So he will instead pay tax on £9,000, even though he's only made £6,000 in profit on his rental property.
So it is going to affect people quite a lot, isn't it? Especially people who have really stretched themselves to do the whole buy-to-let.
Because he's going to be paying 40% tax on an additional £3,000. That's a fair bit of money, definitely.
Yeah, well, it is, especially when you've got multiple properties, isn't it? It's worse and worse and worse. So that's quite a big one for people to be looking at, I suppose, especially for people who are considering going into the property market, of considering how they do it and how they're going to take it forward from that perspective.
Yeah, definitely.
So childcare changes.
A
lot of people who watch me are mums that got little kid vehicles. So what have we got difference to?
So at the moment, to be able to get childcare vouchers and therefore get tax-free childcare, you have to be generally an employee, well, you have to be an employee of a company. That's the only way to get childcare vouchers. There's no option for self-employed parents, which is quite hard, really, because there are a lot of self-employed parents. So what the government announced last year, and there's been more detail on it in the 2016 budget, was they were going to do a childcare account as, with the government, and you would be able to get your tax relief then on childcare up to, I'm not sure on the rate, we didn't do our research on that one either, up to a certain amount each year, and that will be available to self-employed people as well. So I think it's like 3 million self-employed people in the UK, so it's a really positive move. So yeah, mum who's running her business from home at the moment wouldn't get any tax relief on any childcare that she paid for, going forward from as early as the beginning of 2017, and hopefully it'll be rolled out by the end of 2017 for everyone with children under 12. There will be tax relief on childcare,
which will be that'll make a big difference, won't it?
Yeah, especially because a lot of businesses seem to start up when mum doesn't return to work after having their children. So she has got young children, and she's trying to balance that with starting a business. And yeah, she'll have more options to be able to go and get some childcare. So yeah, it's good.
Which is I mean, just huge, especially when they're under 4.
Yes, exactly.
As you know. I know. Yeah, I mean, loads of people that we obviously speak to, because you're in similar circles to me, and in online networking particularly, who are self-employed mums who, as you say, they've left work and they've had a baby and they're sitting at home and they're thinking, I really want to spend some time with my children, and yet I want to be doing my business, and just trying to find that balance there can be quite tricky. So anything that helps that is always a massive bonus.
Right. It's really positive, and that will also be available for people with children up to 12 years old. So even though they're at school, things like holiday clubs are so expensive that they'll be able to be used on those holiday clubs. I would assume those that already accept childcare vouchers will be using the new childcare scheme. So yeah.
And of course, if this all as and when this all comes in, there'll be more people that will then accept those schemes, and it will all kind of snowball from there, won't it?
I hope it will. Yeah.
So that's covered most of the things that covered all the things that we were going to talk around. Oh no, we didn't cover dividends. So let's quickly mention that one. Cover dividends. There's a new tax change for dividends, isn't there? Which obviously, for those who are wondering what a dividend is, that's for limited companies.
Yeah, so a limited company, the money that you withdraw from a limited company is a dividend, and it was announced in the summer 2015 that the way dividends was going to be taxed was going to change. Currently, you get a 10% credit on your dividend income, and then you pay different bands of tax depending on what rate taxpayer you are. For a basic rate taxpayer, you pay 10% tax, so you end up with no tax liability on your dividend up to the basic rate tax band. So that's now changed, and from April, so a couple of weeks time, when you withdraw a dividend, you no longer will get that 10% credit, and you will also be charged 7.5% at the basic rate of tax on your dividend over £5,000. So you get £5,000 free, with no tax on dividends, and then 7.5% on everything up to 32,000 or 32,000.
So is that's a positive change, or is that?
It will mean an increase in tax on limited companies. I did a lot of calculations on it over after the announcement in the summer. So for a limited company director shareholder who is within that basic rate tax band, there'll be an increase in tax of about £1,900. But given the reduction of corporation tax that will be coming in over the next few years, hopefully that will therefore help towards that additional personal tax bill.
Yeah. So it's kind of positive, kind of not positive.
It's taking the money now and then giving it to us later as well. because the tax obviously comes into effect April 2016, but the reduction in corporation tax won't come into effect until April 2020. So it's 4 years of quite
That's quite a big chunk for basic rate payers, isn't it?
It's about, it's approximately £1,900 additional tax, but it's still more tax efficient to work through a limited company than to work as a sole trader. So
once you've got a certain amount of profit, isn't it?
Yes, exactly. Once you're earning over £10,000 a year, normally it starts to be more tax efficient.
Because obviously limited company accounts are more expensive, aren't they? So there's
slightly more expensive, but there's not
crazy,
not a lot. For a sole trader who doesn't sort of look after their books as such, they're looking at about £400 to £450 for accounts and tax return, whereas a limited company is looking at about £750. So it's not a massive difference. So the tax saving, can quickly cancel that out.
Yeah. And obviously, if people are not sure, the best thing to do is to speak to an accountant.
Yeah, it's always worth getting advice. And most accountants will offer an initial half an hour consultation free, where they can tell you whether it will be more advisable to go to become a limited company and give you more one-to-one specialist advice.
And of course, for example, if there's any questions about budget and bits and pieces, in fact, we've got a couple of questions, so I'll ask those now. Sam said about clarifying the changes to business rates, which I think we've pretty much covered, hopefully on that one. So that's done. Tick, hurrah. And then Catherine has said, I'm 40 in November. Can I get a lifelong ISA? I see conflicting reports, for example, under 40, or some reports say 18 to 40. Thanks for any advice that you've got.
I had a read on this last night about who will qualify for lifetime ISAs, and from the information that I read, I would say that anyone who was born after April 1977 will qualify for those lifetime ISAs. Those obviously within the first few months of April, May, June of 77 will want to get those accounts open quickly, because they can only open it up to the day they turn 40. Once you turn 40, the scheme no longer is available. So
that is potentially a no then. So if
she's turning 40 in November, so if she was November 1976, then that would be a no.
I see. So that's not great.
No.
But that's easy. It's fairly easy to figure that out, isn't it? So it's from the April the 1st, 2016.
Well, the date's not clear. The product's going to be available from April 2017.
April 2017, sorry, yeah.
So if you turn 40 on the 1st of April 2017, I'm not sure whether you will get there in time. But it's 2017 before it will start. It may be that they allow you to open accounts slightly earlier than that, so that you're ready to start investing from April 2017, because we've obviously got 12 months notice on that. So,
and they might be keen to get us to do that, but that'll obviously all come out of the wash in the next few months, won't it?
I think we'll start seeing an awful lot more about them from then.
Brilliant. Well, that's been great. You've certainly cleared up a few things. We've talked through a few bits and pieces. Is there anything else that you think that we have maybe missed or is worth a mention, particularly for smaller business owners?
I think we've covered everything. The big things that are coming in this year and next year, I think we've covered today. So hopefully it was helpful for everyone.
And of course, this is being recorded, so it's going to go out. So if there's any questions anyone's got at any point, they can just pop it in the little comments below the video, and we'll do our best to answer them as and when we see them on there. Yeah. Thank you very much. And so, obviously, if anybody wants to get in touch with you, what's the best way to do that?
Best way is to visit my website, which is www.emmastephensaccountancy.co.uk. From there, there's the option to give me a call, or you can book an appointment online. I'm always happy to chat via Skype, as well as meeting face to face. or send me an email, and I will get in touch.
And you'd be happy to chat through any questions that people have got about.
I'm always happy to help.
From teeny tiny startups right up to big companies that are
definitely
have questions for any of these things. Marvellous. Well, thank you very much, and we shall call it a day.
Thank you very much, Sophie.
Thanks, Emma.